Hi, Jeff.
Hey, Meesha.
Welcome to episode 9 of the North Atlanta Real Estate Podcast with Meesha Rawal.
And Jeff Ahi.
And we'll jump right into the market update for July 2025. And Jeff, why don't you take the lead and tell us what's happening in the market?
Okay, so we're going to look at sort of the same zip codes we did last time. We're going to be looking at South Forsyth, and the zip code we're looking at in particular there is 30041, mostly found on the east side of Georgia 400. And we're going to be looking at 3005 in the north part of North Fulton, sort of windward area down south to kind of Old Milton Road. And then we're also going to look at 30022. It's a little further south, also in North Fulton. And then we're going to look at 30024, which is Suwanee in North Gwinnett, and part of that bleeds over into the very east side of Forsyth County. So we're going to look at these things. And so what we're going to see, I don't want to kill everyone with a bunch of numbers. It's hard to listen to, right? But what we are seeing when we're talking about properties that are generally under $700,000 in this area, which is kind of the, a basic mid-priced home in these areas, and the majority of the inventory, when we look at 2024 home sales across the country in our area too, we're at kind of a 30-year low in the number of homes that have sold. And when we look at what has just happened in July and we compare it to July of last year, all of a sudden, 3005 and 30041, so that's North Fulton and that south part of Forsyth County, are down about 20% in sales compared to last year, which is already a very slow year. And then when you look at 3022, that's down 55%, which is huge. That's like half the sales of an already depressed level, right? And so then in 30024, and we're going to talk about a property you have out there right now in particular, that's down almost 30%. So why don't we break in and just talk about that house? Since we just talked about 30024, you have a listing out there that's priced at $750, right?
Yes.
Kind of
right
tell
at
us about that.
$750, and it's been on the market as of the recording about 52 days, and we've had a lot of showings, and by a lot of showings, 3 digits. So about
crazy.
100 plus families walked in through the house with agents entering the open house, and which shows that there are a significant number of buyers actively looking in this price point. That means they took time out of their day to come look at the property. They knew the affordability, they liked the area, they liked the location, they liked the pictures, and they came. However, there were not as many offers as we were expecting, which surprised us because the house is in amazing condition. It is priced really well, great schools, but it means that the buyers are in some sort of a holding pattern. They are waiting either for the interest rates to slow down, waiting for sellers to reduce prices, waiting for some concessions, waiting for their situation to improve, maybe get a bonus or some external factors. But I feel at this point it's like, who blinks first? Is it the buyer who's willing to write an offer because they love a house, or the seller is willing to wait it out for the perfect buyer without reducing the price?
Yeah, and I think what I'm a bit concerned about from a standpoint of when we're talking about the seller side of things, who have been really in control of the market, but what is happening here, it feels like there's a little shift going. The prices maybe haven't slipped a lot yet in most cases. However, it does feel like the scenarios are set up where it could. So for instance, when we look directly at where you are there in that 30024 zip code, sales at that price point of about $750 are down about 40% from last year. And so sales are down, but inventory has increased 58%, 60% kind of thing. And in fact, as you go lower in price range, it's up 130%. So here, and you just talk, economics 101, if you have a lower demand and a higher supply, prices come down, and homes are no different. This is a market. And so maybe what's going on now, buyers are just being selective. They're purchasing the best homes on the market, and the sellers are still able to get that good price for that home. But once we sort of run out of those buyers that are willing to make that commitment, the sellers are going to have to attract them with a lower price point. It's what I saw happen in 2008 when our market was shifting with a great, recession that we were having, right? And what ended up happening is a lot of the buyers stayed on the sideline because the prices they could see started to erode. And the buyers were like, well, hey, if I wait 6 more months, I'll get a better deal on the house. And I hope we don't get back into that kind of scenario where buyers just wait and there's always going to be somebody that has to buy, but a lot of the market also will just sort of wait on the sidelines.
Absolutely. And then the job market in our neck of the woods is fairly strong. We have a resilient job market in the suburbs here. But then the 10-year Treasury had a bit of a change.
Yeah, so when they announced on Friday, those labor reports came out and it showed the July job market was weakening in the U.S. And then it also showed big revisions downward in job growth, both for May and June. That's what really shocked the market. That's why we had the big drop in the equities and the stocks on Friday. But when that dropped, the 10-year Treasury, the rate improved quite a bit from a home buyer's perspective. It went from whatever that was, about 6.35 or something. Now it's dropped down to 6.2. I saw it close today. And so hopefully interest rates should trend. They usually trend towards the 10-year. So we'll probably see improving interest rates now. And then, of course, the Federal Reserve is going to be meeting in September. I think it's like the 17th or something like that. And then what's going to happen then is the likelihood that they do a interest rate decrease there on the discount rate is now pretty high. It's priced in. I think the market's pricing at about 87% chance that there'll be like a quarter point reduction. So the buyers might get caught in this waiting game. We're like, well, if I wait just a little while, rates probably be improved a little bit. And, it's going to be interesting to see what happens here.
Absolutely. And we're not soothsayers. We don't know how the market's going to be. And, we refuse to tell buyers, hey, why don't you bite the bullet? Yeah. And, it's going to hurt either ways. But, buyers know their situation. They know when the right time to buy their houses. Sellers have to sell their house. And, people use various circumstances to put the house on the market. But the job report and the real estate report that you just laid out for us is very interesting, that we've seen a huge reduction in the number of sales while the days on market has been growing up.
Yeah, and prices have remained relatively stable thus far. And one last thing before we get off these numbers, just one thing that kind of jumped out at me. I was looking at some of the attached homes up in Forsyth County, and that's going to be townhome or condo, mostly townhome up there. And what ended up happening is the days on market really spiked. It was going along at about 70 or 80 days on the market, and now it's jumped up over 120 just really quickly like that. And so the other thing that happened, I noticed, is that the sales price to original list price ratio, so let's say originally they put it on at $300,000 and now they sold it at a lower price, maybe it even had to have, it expired from the market, so all that taken into account. Now all of a sudden, those guys are seeing some price decreases. That part of the market definitely has experienced it. Now they're only getting 91% or a 9% reduction from the list price. And so if you had a $300,000 house, 9% would be $27,000. So it would be kind of common then. It would be listed at 300, but maybe it's only selling for 273,000. Mm-hmm. And we haven't really seen that kind of reduction in our market in a long time.
No, and I feel that could also be attributed to the high HOAs that some of these townhouses have been charging. Like, I had a house that I listed. This is 800 Old Plank Square in Johns Creek, and when we put it on the market, the HOA was $225. It included the water, the termite, the insurance. It was a gated community, and when I spoke to my sellers who were keeping track of their house because they had wonderful memories, they said that the HOA for that particular subdivision went up to $450.
Wow, that is a big increase.
And they took away the water. So now buyers, homeowners are paying about $5,000-$6,000 just for the privilege of being in that particular little community. And I think one of the reasons is because there's just so few houses in that little subdivision that it gets distributed amongst those few people.
Yeah, and so that part of the market it also can be an indicator, right? It's slowing down. And I remember back in it was late 80s when I started. I remember we were just entering a light recession in like 1991 or something. And I remember all of a sudden it was so hard to sell a townhome or a condo, and that was back in town. We didn't have all this product out here now. But back then it was just so hard. And this is sort of maybe an early indicator. So it's going to be interesting, and we'll of course tell the audience as the next couple months roll on, what is going on. Are prices holding up, or do we start to see an erosion? And we're seeing it right now in the townhomes in certain areas. So we're going to keep an eye on that. And last point that I'm going to plug in here, I think the thing that this says more than ever, when a market starts to shift, if someone's going to do something, whether it's buy or sell, you really should get a good agent to help you understand exactly what you're trying to do. Because we're talking about generalities and areas, and I guess talking about other parts of town, and all these markets can be a little bit different. And so you have to have a good agent that can help you analyze things and help you make a good decision for your family, right? So
follow Meesha
and Jeff
as we analyze the North Atlanta real estate market for you. Bye for now.
Bye-bye.